Hi guys, and welcome to another week ahead video. Now in this week's video, we're going to be focusing on the Kiwi dollar and the upcoming RBNZ rate decision that is scheduled for Wednesday this week. Now currently we do maintain a bullish bias on the Kiwi dollar given the improvement that we've seen in the domestic economy over the last couple of months. But a very important consideration point, especially for the RBNZ going into this week's meeting, is the recent outbreak of the coronavirus. Now, we know that a lot of China has been on lockdown. As a result, a lot of the exports or imports going into China from places like Australia and New Zealand has been affected. Now, it has been suggested by some analysts that the impact of the coronavirus on the New Zealand economy might not be as big as we think, and they have referenced the SARS outbreak in 2003 as an example. Now, from the SARS outbreak, the New Zealand economy suffered just a drop of 0.1% off of GDP on the back of that SARS virus. Now, the challenge with the SARS virus and the coronavirus is the amount of exports have almost tripled going from New Zealand to China from 2003 to last year. So there is a real threat that this current outbreak can have a much bigger impact or negative impact on the New Zealand economy than was previously thought. Now, some recent research that has been developed or released have shown that the possible outcome might be a drop of as much as 0.6% of quarterly GDP on the back of this coronavirus. So definitely something very important for the RBNZ to consider, and definitely something that we'll be keeping an eye out in that upcoming meeting in the week ahead. So let's jump into the meeting now, or into the video now, and see exactly how we can prepare for that event and hopefully trade it as well. Okay, then looking at the baseline for the Kiwi dollar. Now, despite the recent downside that we've seen in the commodity-based currencies like the Aussie, the Kiwi dollar and the Canadian dollar, in the short term, we do maintain our current fundamental bullish bias on the Kiwi dollar. The reason for that is the continuous improvement that we've seen in the recent domestic economic data out of New Zealand, which has basically been better than both the RBNZ as well as the markets were expecting. Some recent examples are GDP that surprised to the upside with the production approach quarter-over-quarter GDP coming in at 0.7 versus expectations of 0.6. We also had the annual average GDP year-over-year beat the market's expectations by coming in at 2.7% from expectations of 2.5. Now, we also had recent announcements of substantial fiscal stimulus resulting from big infrastructure spending plans from the government, which is also another positive development in terms of growth prospects for 2020. We also had inflation as well as employment data. Now, inflation printed better than expected. The Q4 CPI beating expectations of 0.4, printing at 0.5, and that CPI year-over-year number coming in very close to that 2% target, coming in at 1.9%. Looking at the most recent employment data, also a positive sign with the unemployment rate dropping to 4% from 4.2%, even though we did have a slightly softer job growth in terms of quarterly numbers. Now, following the better than expected CPI number coming in very close to that 2% target, the market has significantly dropped their rate cut expectations down to 5% for the RBNZ's Feb meeting and down to a total low of 25% for the rest of 2020. However, we do have the outbreak of the coronavirus that does pose an additional risk to that more upbeat picture that we've seen in the domestic data. Now, even though the actual effect of the virus on the New Zealand dollar economy is largely speculative, some investment banks like Westpac thinks that the effects might be far worse than the markets are currently pricing in. Now, we are currently sticking to our bullish bias on the Kiwi dollar until we've heard from the RBNZ in the upcoming rate decision scheduled for Wednesday, 12 Feb at 1 a.m. GMT. Now, looking at the baseline for the upcoming rate decision. Now, we think the rate decision, rate statement, as well as the accompanying press conference can create a great trading opportunity in the week ahead. Now, the reason for this is the markets are widely expecting the RBNZ to leave rates unchanged at next week's meeting. So the main focus will fall on the accompanying statement as well as the press conference. Now, given the current economic and domestic data, the RBNZ has less reason to follow suit with Australia, which is still expected to have one more cut in 2020. Given the recent positive turnaround in the data, some analysts expect the RBNZ to drop their current easing bias and take on a more neutral stance. However, some like Westpac argue that the RBNZ might not be so hasty given the current risk and unknown risk of the coronavirus. Now, Westpac explains that according to their projections, the coronavirus will knock off 0.65% off of GDP from New Zealand in quarter one, bringing their forecast for Q1 GDP down to just 0.1%. Now, the reason for their projection is based on the fact that the New Zealand economy is much more exposed to China currently than it was back in the SARS virus, the SARS outbreak in 2003. Now, if we go into the details, they explain that the forestry have more than doubled in terms of exports between 2003 and now, and with all log shipments going to China suddenly cancelled, that does pose a concern, as 80% of forestry exports from New Zealand goes to China alone. Now, if the virus does plague China's economy for a longer period than SARS, the impact would be even larger than currently estimated, and could keep the RBNZ at its 50-50 easing mode as a precaution. Now, the other point to consider is dairy prices. Dairy prices and animal products, like we've seen from this chart over here, contributes 50% of total New Zealand exports. Now, this means big fluctuations in dairy prices can have an effect on the economy and sometimes cause volatility in the Kiwi dollar as well. Now, the most recent dairy auction came in very low with a drop of 4.7%. You can see the extent of that drop on this graph, coming in well below that 6-month average. So this will not be a very encouraging sign for the RBNZ, especially on the back of the concerns with regards to the coronavirus. Now, the most recent CFTC data, updated until 4 Feb, did show that the Kiwi dollar did drop back slightly into a net short position, with 4,252 shorts added in the prior week, which shows the virus concerns are starting to weigh more on the Kiwi dollar. However, it is still very small when compared to the almost 24,000 short positions added to the Australian dollar in the past 2 weeks. Now, also be aware that the RBNZ Governor Orr is expected to testify on the monetary policy statement before the Finance and Expenditure Select Committee in Wellington later in that day as well, and that could also see some interesting comments and could create further volatility for the currency. So definitely something just to keep in mind for later in that day after the press conference as well. Now, looking at some possible sentiment shifts, starting with dovish sentiment shifts. Now, the biggest surprise and most dovish sentiment shift from this week's RBNZ meeting would be a surprise rate cut. Now, even though that is a very unlikely scenario, given the current domestic outlook and economic data, we should remember that the RBNZ did surprise markets with a 50 basis points cut back in August, which means that they are not afraid to act and surprise markets if they deem it necessary. Now, a lesser but still dovish shift would be if the RBNZ decides to drop their current easing bias and err on the side of caution by explaining that the outlook would have shifted to neutral if it wasn't for the concerns of the coronavirus. Now, there is a lot for the RBNZ to be positive about in the economic data. Thus, if they decide to downplay the positives that we've seen and rather start to focus on the potential negative impact that the virus will have on the economy, that can be a more dovish reaction from the RBNZ. And if they explain that they remain ready to cut if necessary, that can catch some market participants that is expecting a more neutral stance a little bit off guard and can see some additional downside in the Kiwi dollar as well. Now, what will also be important to consider in this scenario is how long the RBNZ expect the impact to last on the economy. If they think that the threat from the virus will only cause a short-term negative impact on growth and that it should rebound, that might come across as slightly more upbeat. So we definitely need to be careful of those details going into that event. Now, looking on the hawkish side, the biggest surprise, obviously, and the most hawkish sentiment shift would be a surprise rate hike. However, given the current stance, that is a very, very unlikely scenario. A lesser but still hawkish shift would be if the RBNZ goes ahead and decides to drop their current easing bias and explain that they are taking a more neutral stance towards monetary policy by dropping their previous statement that the probability of another cut is at 50-50. Now, given the recent concerns voiced by some investment banks regarding the coronavirus and the potential impact it can have on the economy, another hawkish sign would be if the RBNZ decides to downplay the expected economic impact of the virus and choose to rather focus on the positive hard data that we've seen out of the economy over the recent months. Now, recent economic data like inflation, employment and growth, as well as the housing market, has performed much better than expected by the RBNZ. And apart from that, the New Zealand government is planning a big fiscal stimulus that will further boost growth and employment in 2020. So if the RBNZ drops the easing bias and focuses on the positives, that could see some upside for the Kiwi dollar. Just keep in mind that majority of analysts are currently expecting this from the RBNZ this week. So we might not see as a bigger move from a hawkish move compared to something like a dovish tilt. Now, how we can look to trade the Kiwi dollar? In the case of a dovish sentiment shift, we could look to pair the Kiwi dollar against something like the US dollar, which has remained well supported in the past week from a string of positive economic data points. In the case of a hawkish sentiment shift, we could look to pair the Kiwi dollar against something like the Canadian dollar, which was pressured in the last 3 weeks due to the dovish tilt made by the BOC, as well as a massive drop in oil prices and overall negative risk tones. Now, as the Kiwi dollar is a high beta currency and a commodity-based currency, make sure to pay close attention to the current risk tones at the time of the RBNZ meeting. A risk on tone should be supportive for the Kiwi dollar, while a risk off tone should put pressure on the Kiwi dollar. So just keep that in mind going into that event. Remember that these recommendations are based on the current fundamental bias for these currencies, and that is at the time of writing and making this video, and that can obviously change throughout the week. So make sure to reevaluate whether the short-term sentiment is still valid for these currencies before taking any trades. Now, these type of sentiment shifts are valid for trading phase 1 trades. If you want to learn how phase 1 trades work, you can check out our news trading strategy playlist on our YouTube channel, where we post weekly examples of how these trades play out. Now, after a phase 1 move, we can also look for potential phase 2 pullbacks of that initial move, and we post updates on these moves inside our tradable sentiment shifts report inside the Forex Source terminal under the Market Insights tab. Now, you can also see each day which sentiment shifts are in play and which ones are still valid for trading the phase 2 pullbacks. And you can also learn about how these setups work during our live analysis webinars each day inside the Forex Source terminal.